Hey, I'd like to welcome you to another episode of the Mission Matters Money podcast, a source for all things money. My name is Adam Torres. You can follow me on Instagram at @AdamTorres. Keep up with my book releases, book tour schedules, signings, all that other good stuff. Always love to connect with you there. And as always, I'd like to apply to become a co-author of one of my upcoming books. Just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today is a very special reunion 2020 episode. What is that? That's when I had a guest on in the past, and I liked him so much I had to bring him right on back. So today's return guest is Stuart Kruse, and he's the President and Chief Investment Advisor over at Kruse Asset Management. Stuart, welcome back to the show.
Thanks for having me, Adam.
So excited to get into the show topic today. I know that you're working on a new concept to evaluate companies. Before we get into that, though, I don't want to assume that all the new listeners caught your first episode. So let's just start with you giving us a background on what you're doing over at Kruse Asset Management, please.
Sounds great. So at Kruse Asset Management, we're a boutique asset management company, and we specialize in making our investment decisions only using data and statistics. So we're a small quant shop, and so whenever we make a trade or an adjustment in a portfolio, it's data-driven.
And so just so that the people listening have a good feel, a lot of investors listening, what's typically the type of investor that is a good fit for Kruse Asset Management?
So generally, my sweet spot is a $1 to $10 million investor with investable assets into $10 million. So that tends to be right about my range. If they get a little bit bigger, then they tend to want a lot of banking relationships that I don't tend to offer. So that's kind of my sweet spot.
All right, let's get into today's topic. So working on a new concept to evaluate companies that typically can't be evaluated by traditional metrics. So tell us a little bit more.
Okay, so when somebody's going to evaluate a company, when you're doing it with, I don't care, pick a method, a discounted cash flow or something along those lines, the value of any company traditionally is basically how much money can the company make for shareholders over the life of the company, discounted back to today. So if a company's not making any money at all, then theoretically it has no value. And if you're going to assign a value to a particular company, you're just speculating as to how much money it can make at some point in the future, and you're basically hoping and wishing. So most of the real valuation methods are done off of earnings today, which makes sense. But it makes it very difficult to value or to even capture a company like a Tesla or Netflix or Amazon for that matter, because they've been losing money for so long. Or, Amazon obviously was losing for a long time and now can turn on a profit. But how do you value a Tesla that's losing billions of dollars a quarter? And it makes it very challenging.
Yeah, no, 100%. And especially when I feel like when the investors are diversifying their portfolio and they see some of these companies, they're high flyers, and you're thinking to yourself, should you add it? Should you not add it? Having an alternative way to value that would be awesome. So
we kind of came up with, an epiphany, if you will. I've been working with a guy for a long time who was the founder of a company called Y Charts. That's the letter Y, charts.com, and it's been financially backed by Morningstar. And it's basically a data-driven website to help you look at data in a more concrete way to make decisions using charts and data, not just price charts, right? So I was instrumental in helping him launch this, but in talking with him, he was also disturbed by the fact that we would miss companies like the best performing company of the last decade was Netflix. We'd missed that because they weren't making any money, or the valuation just was so out of whack. So in discussing with him, how we might be able to capture this, it occurred to us that companies like these growth companies have, while their earnings are horrible and you could never really value them on that metric, which is arguably the most important metric, they still have a profile, if you will, where they're growing very fast, and there are a variety of other characteristics about the companies. So instead of just valuing on one metric as a standalone, maybe you look at it as a basket of characteristics, or a fingerprint of a company, if you will. So that's kind of our best analogy. So if it's growing at a certain pace, although it's losing money, maybe that combination of those factors help determine whether the company may be successful in the future. So clearly it can't lose money forever, but if it's growing fast enough, like an Amazon, and it can capture real estate, maybe that profile gives it a better propensity for success in the future.
Now, would you think that this new method would be able to be used on things other than tech? I know, or commerce. So you mentioned some big names like Netflix or Amazon. How does it look for some? I know you've tested it on other types of companies maybe that were smaller we didn't hear of, or is it only for like that space?
Well, the theory would be it'd be for all spaces. So what we are planning on doing is saying, hey, what does Netflix 10 years ago, what companies look like that today, and try and match up, just like, I don't know, if you're watching CSI and you had a fingerprint match, what companies match that fingerprint today, and vice versa. You were looking at trying to evaluate a company, ABC company today, look back in the past and say, what companies matched that fingerprint then, and how do they do 5-10 years from now? And then you're going to come up with a range of answers. And clearly, some companies that are losing money will go out of business. But some companies that are losing money will go on to do great things. And so we're trying to give a profile of what could happen. And what are the likelihoods of a company with these kind of characteristics are going to go on and do great things. Maybe it's 1%, maybe it's 25%, maybe it's 85%. And try to give somebody a profile of what the likelihood is of the success of that company.
Are there any key metrics that you care to talk about in terms of the formula you're using?
Well, I think it's I don't really want to talk about any key metrics right now because we're not ready to publish the
completely
the data.
Fine. I didn't know how far along we were with it. That's all. No problem there.
But we are looking at combinations of metrics, and not to get too advanced, but we're looking at some neural networking programming to try and understand how these connections really work together. So it's really kind of exciting. It's really matching up some of the research that's being done today in the medical field with the financial field.
Do you suspect? Do you plan on using this to manage money in the near future, or after the thesis is out, or how does that work on your end?
Yeah, that's absolutely the plan. I mean, we're looking to manage money, push out an app that should basically give some of this information to the people that are looking for it. So it's a new app that we're working on and a new company, and I'm excited about the future. It should be in beta testing very soon.
Oh, that's awesome. So that being said, and love to see people innovating and doing new things and building on your expertise. I mean, it's going to be good stuff, and that you're also making it available to the masses through the app. So that's awesome. So if somebody, Stuart, is listening to this and they want more information on Kruse Asset Management or the new app and everything else you have coming out, what's the best way for them to connect and get that info?
The best way to connect would be you can go to my website at KruseAssetManagement.com, Kruse is Kruse, or find me on LinkedIn at Kruse AM, or I think my Twitter handle is also Kruse AM as well.
Awesome. Well, hey, Stuart, it's been awesome catching up with you on this reunion 2020 episode. Excited to have you back on in 2021, see what's going on then, hear how everything has worked out for you, and to hear more about the launch of the app and how it's done over the course of the year. So all great stuff there. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave me a review. If you're watching this on our YouTube channel, Mission Matters Money, then leave us some comments in the video section. Let us know what you thought. Love to hear from you. And Stuart, thanks again for coming back on the show.